Good afternoon, everybody, and welcome to Paul's Money Market Update. Here we are for number 229 for Monday, 29th of June, 2026. I hope you're well. Hope you've had a good weekend. Hope you're ready for another interesting week in markets. As always, if you're joining us for the live session, if you could let us know that you can hear my voice and see the slides, that would be very much appreciated. For those of you joining us for the first time, Paul's Money Market Update is just that. It is me flying through as much as I can possibly share with you over the next 30 minutes as I race through looking at strength and weakness within FX indices and commodities markets, looking at some charts of interest, and then a look at the live markets. It is not a signal service. There are no trade recommendations. It is just me sharing with you what I'm looking at the moment, which may be of relevance or of interest to yourselves. As always, you are very welcome here, but just remember, you're always responsible for your own trading and investing decisions. And if you want a little bit more education this afternoon, I'll be running the Active Trades Monday Market Matters webinar at 2 o'clock London time. You can register on their website or use that QR code. And the educational piece today will be on an introduction to basic smart money concepts in trading. And if you do want a bit more education, there is a sale on until tomorrow, end of Q2, end of 30th of June. VTP reduction on the VTP stage 2 swing trading and stage 3 intraday trading. Okay, there's a QR code there or a bit.ly code, or just ping me if you've got questions. All right, let's dig into the main thrust. So what is this? What are we looking at? How does it help us? This is just some snippets out of my own work from my own model that I do at the weekends, utilizing what I call the STAM, where I'm looking to identify strength, trend, and momentum within FX indices and commodities markets. Okay, so what is this telling us, and how does it actually help us? Let's bring up the old drawing tool here. So here we are. We are into week 27 of the year already, right? Into the second half of the year. Nights start drawing in, all that kind of dull stuff. But ultimately, we're interested in, right, where's the strength and where's the weakness? Not unsurprisingly, okay, we still have US dollar at the top of the pile. As I said, I think a couple of weeks ago, you know, the market focus has switched from being interested in that kind of war on Iran, risk off mode, to basically looking at the state of the US economy, and in particular the path and trajectory for Mr. Marsh and any future rate hikes. Okay, so depending on who you speak to, they're all talking between 1 and 3 rate hikes. Okay, at the moment, but of course we know these things can change. Either way, that has provided that continued strength to US dollar, which we'll see in a moment. In second place, okay, is sterling. It's kind of an interesting one there because, of course, you know, we're going through let's say the kind of political shenanigans that are happening at the moment, with regards to last week, Mr. Starmer resigning, okay, and his the Prime Minister elect, the Messiah that is Mr. Burnham. He, you know, is basically sort of walking in unopposed to number 10 Downing Street. Okay, and now there's you know, I might have some particular questions about the state of democracy, but let's not get Paul onto his middle-aged man rants. Ultimately, all we're interested in is there opportunity for us as traders. Sterling was, it was a good session this morning, Sterling, but a lot of it was kind of not massive volatility, mainly because everybody's waiting for Mr. Burnham's presentation, which I think he did about it's about just around the hour and stuff. And so, and certainly just looking here over my shoulder, the markets seem to have responded to it very well. Okay, but you know, you know, he's not going to come out and say something terribly radical in his first real sort of speech, is it? So let's see how the sterling and the bond markets, okay, dissect more of his comments over the next few days and weeks. All right, but ultimately, as I said, sterling's kind of in second place there, which kind of amuses me. Well, kind of equal measure of amuses me and bemuses me, but you know, you have to trade what you see. And certainly this morning, okay, was, if we look at that for basically over the since markets opened last night, I would look at that as a bit of a risk-on kind of sentiment there, okay, with Kiwi, Sterling, Euro, and Aussie being the stronger ones coming into the start of this particular week, especially after we also saw, a few tit-for-tat strikes there between the US and the Iranians over the weekend, but it certainly seems to have not really kind of dampened the spirits, all right, for kind of risk on, certainly for this morning. And interestingly, that kind of links is that little bit of Kiwi strength, because actually Kiwi has kind of dropped to the bottom of the pile in terms of the longer term swing trading STAM, right down there with Canadian dollar. Aussie is in third place, but I've been saying this for months now that my view is that Aussie is kind of starting to roll itself over, and certainly when I start to look at the Aussie and Kiwi pairs, okay, there's a lot of them have now shifted into selling environments. All right, that's kind of noticeable to myself. Swiss franc has kind of rolled over. It's fair to middling, as is the euro. Okay, nothing terribly exciting there. Yen, well, yen is really, I think you watch that on the dailies at the moment, okay, to see whether there is any kind of a joy in there. Okay, certainly wasn't this morning when we look at that, but I would just keep an eye on the yen dailies across the board, and if we have time, maybe we'll have a little look at that later. Moving to kind of FX indices, so the indices and commodities. Interestingly, S&P has now gone tactical short for me. Quite a lot of weekly candles there, which we'll look at in a moment. Some interesting candle formations to look at to see whether there is whether it's a case of a bit of a pause, whether it's a bit of a pre-summer break, whether it's significant, has a deeper significance. We'll look at in a moment. But interestingly, oil is now strategic short, gold, okay, and silver strategic shorts, and as is Bitcoin. Okay, Bitcoin we'll look at in a moment. And when it because I think I said this last week, you've got dollar strength, and of course naturally that is having an impact on oil, gold, silver, Bitcoin, and as we'll see, other areas, okay, which we'll look at in the moment. So no major change since last week, okay, just a maintenance of that dollar strength, okay. And when the dollar's strong and the dollar's running away with it, that's not something you particularly want to fight. And if I look at the very latest, because that's the work I do at the weekend. If I look at the very latest download, okay, this is the STAM 2 plugin. Okay, you get on STAM 2, giving the latest update. Well, all it's doing is confirming what I saw, namely that dollar remains strong, and certainly the 4-hour charts are strong. Sterling, okay, is strong. Okay, still in second place there, and strength on the 4-hour charts. And well, we'll see, but it looks like the immediate response to Burnham's speech, okay, has been broadly sterling positive. All right, but we'll see whether that holds out. And then then really you've got a bit of a fair to middling, really. Euro, Swiss franc, okay, even Canadian dollar, all kind of much of a muchness. And as I said, Aussie is kind of rolling over there. Look at the daily and the 4-hour charts, okay. Maybe we'll have a little look at that as I said, if we have time. All right, so there's a little bit of update on FX indices, commodities. Let's switch across to a few charts of interest, okay, that you might want to take a look at and watch. So just bear with me for a moment, and I'll start bringing up the live charts. Okay, so here we are. Hope you can still hear me. Hope you can still see the charts now, which is we've moved, as I said, to a few charts of interest. Okay, these are just a few charts that are on my watch list. That are either interesting price action going on, or you might just want to be able to learn something from them. Okay, so who are we looking at this week? First one is ISEQ, okay, the Irish equity market. All right, so I occasionally look at this for various reasons. I'm half Irish, used to live in Ireland, back and forth constantly. All right, so this is the weekly chart, and as you can see, for the most part, that has been in a great bullish trend, hasn't it? Some pretty steep, full-on pullbacks. I won't deny that. Okay, you can see that there for yourselves. But for the most part, we have kind of continued to work our way higher, and really that kind of 50 period moving average for the most part has acted as really kind of nice dynamic support. I'm kind of interested in this because, of course, last week what happened is we traded to 14,000. All right, so even though we might have seen those kind of American stock markets starting to kind of maybe a little bit of heat coming out of them, I wouldn't necessarily say they've rolled over, far from it, but a little bit of a pause going on. There may be a little bit of a plateau, and that didn't stop the ISEQ from trading to highs there, okay, at 14,000. I think that's an all-time weekly high as well. So we have to remember it's kind of Irish equities, very much tied to the overall broader kind of European risk tone, all right? And so they're also, it has an impact. It's impacted by, of course, elements like the sort of kind of European, the euro, European bond yields, banks, property, global risk appetite, right? I would treat ISEQ as a bit of a European risk barometer, okay? It's had a good run for the first few months of this year, okay? The question is whether it can maintain that, all right, okay? Whether this is a rotation maybe out of some of US tech and as it goes elsewhere into other US sectors, whether some of it also finds its way into European and in particular Irish equities in there. So want to actually see, can it get above 14, or is it going to fall its way back from there? Next one is EAM, all right, the Emerging Market Equity ETF, okay? So this is always of interest to me, okay? It's especially if you're looking at like emerging market currencies. It's also good, interesting counterweight to sort of dollar in terms of what we're seeing. If you weren't aware, EAM kind of tracks large and mid-cap emerging market equities, all right. As you can see for yourself, it's had a strong year, hasn't it? It has had a strong year. In fact, if you go back to the sort of Trump's tariff tantrum, as that low there of kind of $40, well, you can see it's been, for the most part, that has been a fantastic run, hasn't it? Great trend. Deep pullback here, okay, at the sort of start of the war, kind of earlier on this year. No surprise, pretty much everything did. The kind of thing I'm interested in is that we're up here at $70, but if we look at that, a couple of weeks ago we printed. I look at that as it's a bearish engulfing candle. It's a bearish key reversal candle as well. In that price pushed to a new high, but then rolled over and closed beneath the low of the previous candle. And then it also printed the same last week as well. So you've got kind of two weekly engulfing candles, two weekly key reversals there. Okay, so. The thing about EAM, of course, is it's vulnerable, right, to any big moves in dollar, right, whether it be dollar bounce or risk off move, all right. So, of course, what we have seen is, of course, we have seen that dollar strength, certainly over the last few weeks, and you have to wonder, well, is that what's also putting the brakes on EAM at the moment? Okay, can those kind of global equities hold up? Can it attract momentum, or is that price action on the weekly chart with the 70 kind of an indication that we are likely to see more continued dollar strength and maybe a drift lower back down towards the kind of 20 period moving average at 64. So that's why it's on my watch list. Okay, there's interesting price action to sort of to follow up with over the next few weeks. All right, talking about interesting price action, okay, MicroStrategy, or strategy as they call themselves these days, okay, fascinating chart to look at, okay, maybe 18 months ago it would have been called Sailor's Savvy, maybe now it would be called Sailor's Sand Trap, all right, perhaps. So of course, strategy now, the sailor has well and truly taped his feet to the floor, okay, when it comes to Bitcoin, and of course, when Bitcoin was surging to new highs, okay, of course, everybody thought he was the messiah, okay, and he was a genius. As we have seen Bitcoin fall away, well, so we have seen the same in strategy share price as well. And I'm kind of interested in it because here we are sort of last week kind of cracking $100, all right, cracking $100 and actually bang down to $80 odd, $83, all right. So what happened, of course, is Saylor, bought billions worth of Bitcoin, and now with the kind of the fall in the Bitcoin price, Strategy's valuation has now fallen below the value of its Bitcoin holdings. All right, so that's pretty significant. All right, that's a pretty major sentiment shift, and market is now looking at more on not so much about how much Bitcoin you own, but how much kind of funding pressure they're under, whether that stock weakness can hold up, all right, and whether selling some of that Bitcoin has to, moves from being a possibility to being a certainty. Okay, so strategy is it's no longer just a Bitcoin momentum trade. All right, it's now a confidence trade. All right, so of course naturally people are watching Bitcoin, and we'll look at that in a moment. But this doesn't look terribly happy, does it, as well? And getting beneath big psychological round numbers like $100, that starts to worry people. Now, of course, there will be people who will be thinking, well, this is a great buying opportunity. Perhaps personally, I did, on what that chart's showing me at the moment, I personally don't see it, but others will differ. But I'm fascinated to see whether we stay beneath 100. Okay, can it recover from there? All right, or is this a sign of a deeper move south in Bitcoin itself? All right, so fascinating chart there for us to keep an eye on. Okay, so one company that does have its earnings this week is a pretty light, thin week. Okay, it's the end of the Q2 sessions. All right, is Nike. Okay, so listen, everybody knows who's Nike, a global sportswear footwear brand. All right, once again, I'm interested because they're down here at a big round number, namely 40. Now I normally say on the weekly charts, but let's look at the monthly charts here on this. Yeah, here we go. So you can see for yourself there that's been some fall from grace, hasn't it? Really, as a share price, that is most definitely what I would call a Duke of York chart. All right, okay. He marched him up to the top of the hill, and then he marched price down again. All right, and that has literally gone from 40 up to 180 and back down to 40. That is quite some move, isn't it? Absolute shocker of a move. Okay, so there's been all sorts of shenanigans going on. They've had to appoint a new CFO. Now they're all looking at, as I said, earnings is this week, later on this week, all right, but it'll all be about tone, right? Tone on China, tone on margins, the inventory, the guidance, and whether the management have shown any real credible signs of a turnaround. All right, so you've got to look at, if the news is good, will 40 act as that support level, or if the news is poor, will 40 crack and we go lower, right? But that's been quite some chart, isn't it? That's fast. As I said, that's the monthly chart on it. Okay, finally, Jets. All right, Jets is who are they? That is the airline industry ETF. Okay, so it gives exposure to it says it's exposure to global airlines. It's mostly kind of US airlines and travel names. All right, so it's a kind of a reflection of that. Once again, you would say that this chart, is for the most part in an uptrend, but there has been some significant swings here, hasn't it? There's been some fascinating swings. Okay, not unsurprisingly, a lot of that driven by the economy, driven by events in the Middle East. Okay, because of course it all really does factor about jet fuel. Okay, that is the key swing factor. All right, so of course what we have seen is, as the war in Iran has tailed off, shall we say, more so than ended, let's say it's tailed off, that of course has naturally had a huge impact on the price of oil, which we'll have a quick look at later. And of course, as that happens, well, invariably that's good for the airlines. Okay, we can see here sort of where we were for earlier this year, and that was a real kind of scrappy block. Although interestingly, we were still kind of respecting that sort of 50-period moving average. I was looking at this, sort of looking at here where we just coiling up before we kind of rolled down to the 200. But you can see, once we started to get peace sort of deals, well, markets believing there was peace deals, well, you can see for yourself that has kind of hurtled its way higher, hasn't it? And so what we're into that summer season, aren't we? We're into summer travel. How much of it is going to be affected? What's the cost of fuel? What's the risk appetite in terms of the trade? Are people going to have an appetite for risk, and are people going to have an appetite for traveling? All right, if that happens. So if oil keeps falling, well, all of those airlines, that helps their margins, it supports their margins. But then of course the next thing is, if there's more geopolitical risk, or there's a bump higher in those fuel prices, well, then this ETF can reverse quickly. So it's one I watch. I'm fascinating in the aviation defense sectors. It's kind of my hobby horse, should we say? But it is fascinating to watch how these ETFs, this JET ETF, it kind of is very, very sensitive to geopolitical and fuel price risk, not unsurprisingly. But as I said, it's done well the last few weeks, and we have to see whether it can hold on that. If you look at some of those American airlines, all right, they have put also in significantly good performance over the last couple of weeks. Okay, there you go. So that's the charts of interest. Let us have a look at the live markets now, shall we? Let's bring those up, see what we've got here. Let's bring that down. Okay, so bang, what are we looking at here now? This is just my kind of indices, one of my indice profiles here. So what have I got here? We've got NASDAQ on the Dow on the weekly, NASDAQ on the weekly, S&P 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX, and then oil. Okay, so not unsurprisingly. Okay, so I might just need to update that. I think that one on this. This is not my main trading computer I'm on this week. So let's just see if that needs to be updated. But either way, oil we can see is basically it is working its way lower there, right? Not a massive price, even with some of the as I said, some of the shenanigans that we've seen going on over the last over the last couple of days over the weekend. But yeah, we can see bang. There we are. All right, we're sub 70, and we're still holding there sub 70 there. Okay, on that. When I look at the indexes, it's kind of an interesting one, because what we see here is, if I look at, let's bring up the old drawing tool here. If we look at Dow last week, Dow actually, it traded up way up to its highs there. Okay, it closed as a double pin bar, which kind of is curious to me. But then so did the Russell, right? Russell kind of traded higher, okay, and closed higher, right? And we've seen those. Whereas actually, when we look at S&P and NASDAQ, well, they are showing us a very different picture. If I look at S&P 500 here, once again, all right, S&P 500 on the weekly, having had a great run there, bang, another bearish engulfing candle, bearish key reversal candle. And then last week we kind of followed it through. We've now, that's a lower high there, isn't it? And we had a really bearish close on that. Okay, if we go down to the daily chart, we're sat on the daily 50. See how we are sat on that daily 50. So I'm going to be watching this week. Okay, does that hold? All right, if that holds, okay, well then of course that means maybe we sort of trickle our way into July and August. If it breaks, well, yeah, then I think we've got a little bit of another leg lower on that. NASDAQ, I mean, if we look at the NASDAQ there, okay, same big bullish run up right into this bearish engulfing candle, bearish key reversal candle, followed by almost like this double top here that you can see on the weekly chart. Okay, once again, we're on the daily chart, we're sat here on the 50. All right, we're sat here in the 50, and the 20 started to see how the 20 started to roll its way over. Are we going to get a little bit of a squeeze this week between the 20 and 50 as we get an indication of what's the likely move forward? All right, so naturally we'll be interested to see what goes on there. We've got NFP at the end of this week, so maybe that could be the kind of chrysalis for the start of a new particular move. So yeah, keep an eye on that. A bit closer to home, DAX is also, we've talked about this for a while now. I see DAX really, every time it tries to get up above 25,000, it kind of fails. It seems to just not want to go any further. Now I'd look at that as kind of pivoting almost around 25,000. Prices here, once again, prices in between the sort of kind of the 20, the 50, 25,000 acting above it, right? What is there going on there that could actually give it a bit of a boost? All right, is there anything really going on there that will move the needle on this? Okay, or is this just us starting to, as I say, trickle into a bit of summer doldrums? FTSE close to home. So I had said that I thought we were kind of coiling up here on the weekly chart, and I thought maybe the burning would get us a little bit of traction. Maybe we'd break out of it. Certainly last week, a bit of a bullish close, but I wouldn't exactly, and we're above the 20, but I wouldn't exactly say it's filling me with real joy or desire or drive, is it? I'm just looking at the latest FTSE there, and there's not really much gone on there either ways. Okay, if I look at it on the daily chart, we've respected that kind of trend line. But listen, price is above the 20, it's above the 50, it's above the 200. That is bullish, but I wouldn't exactly say that that is a swing trend that is kind of sort of exciting me and wants me to sort of get on board that. So I think there's a little bit of a watch and shoot on that at the moment. Look at a couple of the couple of the commodities. So gold is now, we are, last week we kind of trucked down to 4,000. We're beneath that 50. All right, we're beneath that weekly 50. And if you look at that, it's it's a good while. It's a good while, all right, since we were last closing there, right, kind of nearly 2 years ago and stuff. Well, over 2 years ago. So that's quite some move there. If I look at the daily chart, I was interested to see whether this was going to form like a double bottom, and you might say it is a bit of a double bottom, but clearly 4,000. All right, it's a big round number, isn't it? As clearly there's been some maneuvers off there at the moment. Is that anything for us to carry on with? Well, we'll have to wait and see. But definitely that kind of downtrend, all right. And there's an element of that, the dollar strength kind of playing into that. Same for silver, all right. Silver, once again, last week I talked about a couple of weeks ago, we were sat on the 50. Now we've closed beneath the 50, beneath $60. All right, there's nothing. I don't see anything bullish about that. All right, when I look at that on the daily chart, yep, we're just here hovering underneath 60. But there's going to need to be some good moves to basically give us that, a bit of dollar weakness, I'd say, to give us the kind of oomph to move silver higher. And then finally, Bitcoin as well. So we looked at this Bitcoin in the weekly chart. We talked about how, we were just sat on the weekly 200 period moving average. Okay. And was that going to act? You've got 60,000, 200 period moving average. Was that going to be enough to sort of form a base? We certainly bounced off it strongly earlier in the year, but last week we pushed through and we closed beneath the 200 and beneath the 60. Now, technical guys are saying, well, actually, there's nothing bullish about that. Others will be saying, who like to buy a false breakout will be open. Actually, this is a false breakdown and we're going to, fly to the moon from it. We'll wait and have to see. Yeah, personally, I don't see that price action as massively bullish in the sense of, makes me want to look at this as kind of a failed breakout or a double bottom. I'm quite happy at this moment to look at that as kind of a watch and shoot, all right, and just see if it can build a base above 60 and above 20 period moving average before I get interested in that. So, of course, we've just looked at Bitcoin, silver, gold, of course, oil. As I said, a lot of that is all to do with the dollar strength that we have seen, the continued dollar strength. I was the first to admit that I thought, post-war we would see that kind of a dollar fall away. But of course, what we've seen is the sort of the shift towards the US economy, inflation. All right. Here we go. This is my, let's just get that drawing tool again. So this is my dollar profile, all right? So I've got Aussie on the daily, Euro on the daily, cable on the daily, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen, and of course, dollar index, all right? So, even if before I go through the dollar index, you can pretty much see the story, can't you? Aussie dollar on the daily, okay, that's dollar strength. Kiwi dollar on the daily, dollar strength. Euro, okay, on the daily is dollar strength. Dollar against CAD rising, that is dollar strength. Okay, even sterling, okay, that is dollar strength. Dollar against yen, not unsurprisingly, and dollar against Swiss franc. So that's why I have these charts set up like this. You get a very quick snapshot of where's the strength and where's the weakness. And when the dollar is strong and the dollar is strong like this, well, what I try and tell traders is, well, why would you fight it? What's the point of trying to fight that? And if we go to the dollar index on the weekly chart, okay, we have pushed all the way back up 200 and beyond, okay, into this zone. I was talking about this being this kind of zone we've been in here, okay, a bit of supply here, demand at the top, okay, but we have pushed through in. Of course, this, it's the 29th of June, all right, this could be a strong close above that demand zone, above 100, above the monthly 20 period moving average. That to me would be a pretty bullish move, all right. So we've started the week sort of drifting off a little bit lower, okay, but I'll be intrigued to see, do we come up a little bit lower? 20's coming up, okay, do we come down to that kind of 150 area, and then does that become like nice 20 period support as it has been the last couple of times before it makes its next leg up? that would reflect that continued dollar strength that we see there, isn't it? That's pretty strong, showing, I'd say. Before we do sterling, let's have a little look at Japanese yen, okay, on the daily charts. All right, so we're going to overrun a couple of minutes, but as I said, there's always so much for me to share with you at the moment. Okay, so interestingly, okay, dollar yen, euro yen, pound yen, Swiss yen, Nikkei daily, Kiwi yen, Aussie yen, CAD yen. So, yen has been in the bottom of the pile, okay, in terms of STAM for a good while, but not unsurprisingly, it's getting destroyed by the dollar, but then so is everything, okay, and that's why we're always watching out for the next bit of intervention from the Japanese Ministry of Finance, the Bank of Japan, etc. But interestingly, if we look elsewhere, CAD for yen, okay, that has weakened considerably over the last month. Aussie against yen, that has weakened considerably. Kiwi against yen, Swiss franc against yen, they have all kind of weakened. All right, they've all weakened over the last month. Now, sterling yen, that's just there's nothing there to get me joyous over. And euro yen is not much different. Okay, you might say, well, actually, the last couple of weeks we've seen a little bit of that weakness, but as I said, I'm watching the dailies. All right, watching the dailies. Okay, the dollar's on a tear, all right, against everything. But I'm intrigued to see is there kind of a little bit of a turnaround going on in yen. All right, so that might be something to add to your watch list to keep an eye on over there going ahead for this next month. And then let's finish with sterling as always. All right, so cable on the weekly, euro sterling on the weekly, pound Aussie, pound Canadian, pound yen, pound Swiss, pound Kiwi, FTSE. So we just looked at the dollar there. The dollar's very clearly in that trend, wasn't it? It's literally dollar strength, okay, and it's beautiful when you see, the currency against its, major pairs, okay, and it's a very clear trend, as I said. Why would you fight that? Okay, you want to be riding that. Whereas I don't think I can say the same for sterling. It looks a little bit all over the place, doesn't it? So it doesn't, there's nothing really terribly exciting. Okay, and that's probably a reflection of people's overall sentiment and confidence in the UK and sterling at the moment. Certainly pound against dollar cable. If you look at that for this weekly month, I'd say, the last 2 months, okay, has been in a downtrend. We are back down to that kind of 132 area. The daily chart, okay, has been very bearish for June. I'd be interested to see is that kind of starting to run out of steam a little bit. Okay, is there a case of markets when they look at the UK saying things are bad, but they're not as bad as they could have been? All right, and I wonder if we get a little bit of a sterling relief rally. That's why we're seeing sterling up on the STAM there. But yeah, nothing terribly pretty there in terms of pound against dollar. Pound against yen, I look at this personally here. Let's just draw these up here. I wonder if this is basically bang. All right, that we're just coiling up there. Excuse my drawing, as I say every week, I'm a better trader than I'm an artist, but you get the gist, I hope, there. Okay, yeah, we remain above the 20 and the 50 on the weekly. Okay, but I wonder if we're just coiling up. And as I said, I'm looking at those yen pairs on a few of the other daily charts, all right, and I wonder whether, is this us getting into, what might be looking as like a stage 3, okay, stage 3 analysis of just starting to get ready to roll over. So yeah, watch and shoot on this boy. Pound against Swiss has still continued to, this was the start of the war, all right, and that was the S&P said they were going to manipulate, and they did, and basically sold off Swiss franc. And now where I'm interested is we're above the weekly 50, and we're still holding above the weekly 50. If we go down to the daily chart, what happened is, we pushed up above the 50 and the 200. We came back into that nice kind of bull flag, and it looks like we're putting in another nice bull flag as well. It's kind of grinding its way north there. Okay, that is, as I said, that is more to do with, I think, Swiss franc weakness rather than any particular joy for sterling. Okay, so let's just put that in there. Okay, hopefully you can see that. All right, that's what we look at there. When it comes to the condols, that picture's even messier. All right, not unsurprisingly, CAD has been weak, and so even sterling, which has been messy, has managed to kind of strengthen over the last few weeks. But I wouldn't exactly say that is, glorious price action. Yeah, you might say that daily chart, Paul, has just ground its way higher. But as I said, I think a lot of that is more to do with Canadian weakness than any particular love or joy for the sterling. Aussie, pound against Aussie, I think that is looking like it's turning around there, isn't it? I wonder if we are going to get on the weekly, are we going to get sort of, you know, an inverse head and shoulders there building? Okay, that would be a kind of nice, but certainly having got above that 20 period moving average, yeah, I'll be looking to see, you know, is that what we are building? Let's keep an eye on that, see how that particularly plays out. Pound against New Zealand dollar is just, yeah, you know, New Zealand dollar's weakened considerably. It's down at the bottom of the bucket now. So, and you can see that, as I said, even though sterling's got through those shenanigans, it has still managed to, you know, strengthen considerably against the New Zealand dollar. Right, nothing joyous there. Euro against sterling. Well, kind of interestingly, all right. So, you know, I talked about it being in this kind of descending triangle, this descending wedge, and how on the daily chart, okay, you can see every time we come down to around about 86.20, we bounced. And interestingly, you know, we had this real big sell-off, kind of what was that, sort of last Monday-ish, but we continue to be beneath that kind of zone there. You know, normally we've bounced off it, but we haven't been able to get back up above it yet. That kind of intrigues me. All right, is this a case of that we are starting to sort of break into a kind of a lower trend for euro sterling? Is that what we're seeing? Certainly the price action isn't joyous, but that would be my kind of bias at the moment. All right, as long as it stays beneath that, as I said, kind of 86.25, 86.30, and continues to sort of work its way lower, that would be my kind of view on euro sterling today. Okay, there you go, ladies and gentlemen. All right, so let's draw it to a close there. I know we overran a little bit, but it's me just trying to share so much. There's so much going on in the world at the moment. I hope you found that useful. I hope that's given you a little bit of help and a little bit of insight that you can take away into your own trading for this week. And it is it's an opportunity. Okay, so as always, there'll be a good. Remember, tomorrow is also end of month, but also end of quarter. You've got NFP at the end of the week, so make sure that you're on top of your risk management, your order flow, your news flow. It's going to be an interesting one. So, Sentence says, "Hi Paul, what do you think about Polymarket? Do you trade on it or use it as a sentiment tracking tool?" I think it does have value as a sentiment tracking tool. I have traded prediction markets quite a bit in the past, but I haven't done much of it at the moment. I think anything that helps give you a sense of the sentiment is beneficial. You know, I work on the simple premise that follow the money. All right, that is the follow the money. That's, you know, but people have to put their, you know, they're literally where their money, where their mouth is. You know, I'm always happier to give that more credence than just nonsense on social media. All right, there you go, traders. Have yourself a great week. Okay, take care of yourselves. Have a great week, and I'll look forward to speaking to you soon. Take care, everybody. Cheers.